This is a breaking news report and your daily rate watch combined for Friday, February 11th, and I'm Keith Akada with the Mortgage Reel. Egypt now having one of its biggest historical events of President Mubarak stepping down. The market right now has come to some type of a floor. And what we mean by that is we were looking for a floor support before interest rates could break any higher. And this is good news. What's very interesting now, there's a story that's slowly starting to come out in the chatter in the stock market and on the stock market media, is that Wall Street is due for a pullback. Any type of pullback that the Dow Jones S&P 500 has is going to come to the benefit of bonds. And this could be definitely what they're talking about with the bonds being oversold and Wall Street having a pullback. The bonds could be the beneficiary, and for homeowners out there, interest rates could be the beneficiary also. Here's a story that we're closely following this morning on what's going to happen on Monday here with an announcement coming from FHA. And the biggest thing that we're reading into this right now is that the overall cost for a borrower to have an FHA loan is going to increase. And the effective date of this could come as early as April 18th. The biggest thing with FHA is it's a first-time home buyers program, or anyone who's looking to buy a home with the least amount of down payment out of pocket and not get hit on the head with a bunch of mortgage insurance and fees. Well, they did reduce some of the fees in November. They reduced the upfront funding fee to 1%. Then they increased the monthly fee to 0.9%. Well, on the total flip side, it's only been 4 months, and now they're coming out and saying that now they're going to raise both the mortgage insurance upfront fee and the monthly mortgage insurance. Now, this isn't 100% clarified. We're going to be closely following this on what actually comes out on Monday. But overall, we've been talking about how the housing sector is lagging in value, how the housing market is very fragile. Well, you could turn on the turnkey right now and say it's not going to be driven by the fact of the housing market anymore. It's going to be driven, can you even afford to get financing? The biggest thing is FHA has been the gateway for a lot of home ownership, and now with something like this, it's going to make it more expensive. And when you make it more expensive, taking the same home that is supposedly the repressed prices of today just got more expensive coming on Monday. And if you don't have your home in contract and closed by April 18th, well, guess what? If you're on an FHA loan, it's going to be more expensive for the same house that hasn't appreciated nor really depreciated in value in less than 4 months. So the biggest thing here is, if you're thinking about buying a home, you really have to pay attention to now. And if you're selling a home, you really have to pay attention to what's going on with the financing market, because this is going to be the biggest driving force moving ahead in the next 18 months. And here, FHA is not the only story that we're looking to cover here. Both Fannie Mae and Freddie Mac, the government's trying to figure out what's going on with what we want to call non-solvent financing institutions. Fannie Mae and Freddie Mac now own over 50% of the housing market. But here's the most interesting thing. In 2008 through 2010, Fannie Mae and Freddie Mac didn't actually do any loans. The government backed all of the financing by purchasing and putting these out into bonds as increased debt through the stimulus plan to keep interest rates low. So now they're trying to figure out how to make Fannie Mae and Freddie Mac revive again. Well, that seems to be almost an impossible feat at this time. So now what is looking to be proposed is that Fannie Mae and Freddie Mac slowly be dissolved over the course of next 3 to 7 years, and the funding for the mortgage market now comes from the private sector, being Wall Street. Well, we've already seen a couple of lenders starting to talk about this too, and on how they're shifting their investment portfolios. So it's going to be very interesting on this story as how it develops also. But the biggest thing here is that Republican and Democrats once again are split. And even though they created all this stimulus to keep the housing market going from 2008 to 2010, the story now covers is increased cost. And when you talk about increased cost from Fannie Mae and Freddie Mac, we just saw it once through credit risk pricing. Even if you had a 740 FICO score with 20% down, you just got clobbered for more fees. Well, those fees don't look to be going down. And in fact, future and current homeowners, it looks to be going up. Another story that we'll continue to cover. But these are both breaking news that we want to make sure that people understand that if you're a seller or a buyer in today's market, it's extremely important to pay attention to what's going on with the financing sector, just because of the fact that it's going to eliminate or it's going to create more people to buy. And right now it seems to be eliminating some and increasing the frenzy just to be able to get financing for a future home purchase. We'll be back with more on Monday, obviously, as we cover this story. Thanks, and have a great weekend. Make sure to check the homepage of Homeowners Education 101 on the increases of the credit risk pricing that was just implemented by Fannie Mae and Freddie Mac and how that impacts any current or future homeowner that's thinking about either refinancing or purchasing in the very near future. Leave any comments or feedback below, as it's not only appreciated by Team Mortgage Real but also by current and future viewers. Join the conversation on Facebook at How to Beat the Banks and like us when you're there. Otherwise, we'll be back tomorrow with more updates on your mortgage rate watch.